How are we all today, guys? Keith at Crypto Bullseye, and it's 2 days until inauguration, and things are starting to get heated up in the market. And what I want to do is bring in some tools, and I'm going to be introducing some tools, guys, over the next few months. And I've already been speaking to people in the background about how I can bring tools to the table that is going to benefit you. I've been in crypto. Or I've been on YouTube for 3 years now, guys. I've been in crypto for 4 years. I've been on YouTube for 3 years. And one thing that you'll notice on my channel, guys, you're not going to get all the hype of subscribe to Bybit, subscribe to all of these exchanges. I'm not interested in doing that, guys. I'm a UK citizen. I can only work with FCA registered companies. We've got a Compliance and Financial Market Act that I have to comply with. So you're not going to see any of the hype from me. But one thing that I am going to be trying to do is bring in tools that are going to help us with the analysis and help us with the thesis, and not just look at charts, guys. Bring fundamentals and analysis into one place to paint that bigger picture. Because we've got, realistically, guys, we've got 3 months, potentially 4 months to actually be able to make it those life-changing games within crypto. Once you hit that top around about the May, April time, and you expect a volatile pullback, that can suck your liquidity, that can suck your portfolio, guys, 60, 70, 80%. And whilst that's happening, anyone that's new to crypto, you're going to feel one thing. That is the end of it. Could be the end of it, guys. That is going to feel like it's the end of it. And what you're going to do is you're going to capitulate. When you capitulate, that means you're selling low in a loss. Market pulls back. Everybody does the same thing, creates that panic. And guess what, guys? There's people at the bottom buying up and buying up with buy orders. So we need to paint that bigger picture. And I'm going to be bringing tools to the table to help us paint that bigger picture. I want to be scaling out of the market within 10 to 12 weeks of a break of total three, and then I can capitalize on the top. If it keeps going up and it keeps going up for another month, I don't care, guys. I want to capitalize on the first part of the market. I want to bank that profits from the first part of the market. Once we get the pullback, inevitably April, May, June, July. What happens during then, guys? Sell in May, walk away. Why do they say that? It's because institutional holidays, institutional traders, they go on their holidays for 3 months. Everybody packs up. What happens when everyone packs up and closes their positions during a period of time where they get to go on holiday for 3 and 4 months? Takes that liquidity out of the market. They're taking the liquidity out of the market. Once you take the liquidity out of the market, the price goes down. Then you get stagnation and stagnation. The liquidity is still out the market till they come back. So once they come back towards the end of the year, if you've rode your bags all the way to the top, then you've rode your bags all the way to the bottom, guess what, guys? You can't capitalize and you can't create opportunities for those pullbacks. I'm not intending to put the full amount in. I'm intending to put 10% in, 15% in to ride the second part of the bull run, guys, ensuring that the first half is all banked. So I'm banking in the first half, then I'll ride the second half. Second half is going to involve stop losses. It's going to involve more trading. It's going to involve more protections, because ultimately, once it goes up, guys, the market will crash so hard that it will wipe most people out. 98% of your gains, guys. Anyone that's in high risk crypto, 98% of your gains. If you've got $1,000, imagine dropping 98%. It's next to nothing, guys. Pretty much goes to zero. So that was a bit of a rant. That was a long-winded way of saying that I'm going to be introducing new things. I'm going to be introducing new things like tax consultancy services. I'm going to be introducing other things where we can look at measures from a fundamental perspective. That's what we're going to be looking at next, which is Forecaster. I'm going to go over a quick demonstration, guys, but this is a comprehensive tool. So I'll go over bite-sized chunks to help you understand it. And I'm going to show you what I mean, because it does insider information from a fundamental perspective. There's one weird thing on this as well that I want to show you guys, and I want to know what this politician's actually doing, what this politician's actually playing at. So if you know anything about that, let me know in the comments. Right, let's dive in. Well, so that introduction was probably more of a rant, guys. Long introduction, so apologies for that. Anybody that's not bored and that's sticking around now, let's have a look at what you've come here for. This is the Forecaster platform. Now, remember, guys, my thesis, I'm going to be coming out of high risk and I'm going to be going into lower risk for a longer period of time. Why am I doing that? Is it because I'm leaving crypto, guys? No, it's because I'm expecting crypto to crash in the next 9 to 12 months. And when it crashes in the next 9 to 12 months, I want to make sure that I've bank gains along the way to be able to capitalize and run from one bull market into another bull market when crypto is going through a bear market. So we're looking for things that is low in supply, and we look at things that are high in demand. And so if it's low in supply, high in demand, that means that the price is high. So we're looking for things that are undervalued now that are going to be overvalued in 9 to 12 months. So it's scaling out of a high risk volatile asset, i.e., cryptocurrency, scaling into a lower risk asset that we think is going to do good when times are hard around the world, guys. So Forecaster is going to be one of the platforms that is going to help me do that, guys. So crypto, like I say, my strategy 10 to 12 weeks after we get a break and a close of total 3, that could potentially be next week. I'm starting to scale out of my position, guys. Alt season is take profit season. Remember that, guys. When alt season happens, that's when retailer coming in, retailer interested, retailer buying, and retailer buying, and retailer buying. Anyone that's been in crypto for the last 2 or 3 years, you're the one that's going to be selling to those people that are going to be buying. So we're going to be selling, or I'm going to be selling during that 10 to 12 week period. I'm going to be capitalizing out of that 10 to 12 week period. And during the top, where I'm expected to be March, April, I think it'll be choppy during March and April. That'll be a distribution phase. And then I think that we're going to get a mid-cycle crash. Now, how do I know that's going to happen? I don't, guys. I'm not a guru. I'm just expecting that to happen because of the way that the charts look. When you look at total free, when you look at Bitcoin dominance, we've got a strong support to pull back on halfway through. And then we've got a 200 weekly moving average to fall back on. It coincides with the last cycle. That'll cause stagnation. That'll create a pullback in the market. And then I expect to be able to capitalize off leg 2. Will I be putting all of my money into leg 2 if it does play out like that, guys? It's all ifs because I'm not a guru. Markets will do whatever the hell they want. Markets will play out however the hell they want, and markets will catch people out every single time. So if I'd catched my profits in the first part of the cycle during that 10 to 12 week period, during the second part of the cycle, once the liquidity has been sucked out of the market, then I'm happy to put 10% of my position, 15% of my position, ride the second half of the bull market, but I'll be doing it a lot differently, guys, because I'll be adding stop losses in. That'll be more trading than investing. This part's the investing part. This is how I've been building for the last 3 years. The second part of the bull cycle is going to be my trading part of the cycle with a lot less capital as well at risk. So that 10 to 12 week period, how long do you get during a crypto cycle? You get 4 years during a crypto cycle. How many weeks is 4 years, guys? That is 208 weeks. So out of 208 weeks, you get around 10 to 12 weeks of alt season. You might get a second alt season halfway through, but think about the first one. That's the less greedy option, guys. And on this channel, we're not greedy. I want to make sure that I capitalize gains to be able to have life-changing choices. So another long-winded way of saying I'm going to be using Forecast to help me do this. Why am I going to be helping Forecast to help me do this? Because it's got the tools to help me look at what's going to be happening in the next 9 to 12 months, whether something's going to be low in supply and high in demand, and it's just going to help me de-risk my portfolio during that period. So the first thing that I'm going to look at, guys, is the quantum screen. Now we've got different options here on the quantum screen, and you can see 1 month, 3 months, 6 months, 12 months. How long are you looking to invest into a market? So if we've got 12 months, because it's long-term time horizon, we're coming out of speculative asset, which is a short-term time horizon, into a longer-term time horizon. When you get a crash in something that's in low risk, 2, 3, 4%. When you're in crypto, guys, 90% hits you hard. So you can look and we can split this between different instruments. Now we've got commodities, we've got cryptos, we've got Forex, we've got indices, you've got S&P. So you've got all these different instruments here. Now the aim of the game is once you're scaling out of a high risk asset and going into a lower asset, you need to have a spread of that lower asset. You need to have a mix of commodities, a mix of Forex, mix of indices. It's all right to have a bit of Bitcoin in there as well, guys. However, make sure it's an even spread and make sure that you're reducing the risk. So if we, for example, go for the S&P 500, then what we can do is we can filter this. We're going long over a 12-month time horizon. We can click on this, best correlation. So this top one here has got the best correlation. That's over a 20-year period. That's long. It's got a 75% win rate and it's got a 63.2% average return. So that's a 20-year. We can go GoDaddy, 97.04% correlation, 1 year long, 100% win rate, average return 86%. So when you're looking at the quantum screener, guys, if you're looking at the quantum screener, everybody's going to buy GoDaddy now. Look how good that looks. Let's look into it a little bit further because this is where the fundamentals and the analysis come hand in hand. This is where you can really get a gauge of whether something's good or not. So you look at the overview. You can get the overview up. You've got the seasonality, you've got overbought, oversold, you've got fundamentals. Now, this is an important thing when you look at the overview. You've got the net income. This is the net income in green. That's going up, that's going up. It's in a positive direction, it's going up. However, this is the price. Price is currently correlating with the net income. You look at the sales, sales is just below where the price is. So that's showing that it's not undervalued, it's not overvalued, it's around about where it needs to be, but we can check overvalued and undervalued very shortly. We look at the seasonality next. Why is it important to look at this? Because if something correlates with a high degree of probability over a longer period of time, that gives you an edge because it helps you know by adding the seasonality what it's expected to do in the near future. So this is the 3-year in yellow. This is the 5-year in red. What we're going to do is we're going to add in last year, then we're going to add in the 7-year, then we're going to look at the correlation. So the first thing we're going to do is go down here. How well does this correlate? Look at this, 97% 1 year or last year, 86% 3-year, 91% 5-year, 86% over a 7-year. So as far as the correlation is concerned, guys, it doesn't get much better than that. What's that telling us? We're here. We're here. That's telling us that we're likely to get a pump on GoDaddy all the way up to the 14th of February. In the 14th of February, according to seasonality over the 1 year, the 3-year, the 5-year, and the 7-year, we're expecting quite a strong pullback going all the way down to the 13th of March. So if this was something that we were interested in, you'd be riding it up here. Unless you're going to sell up here, you'd be looking to get an entry around about there as far as a good entry is concerned. 13th of March, as far as the seasonality is concerned. So the next thing that we're going to look at, is it overbought or is it oversold? Because we look at the advanced DPO here, this tells us information. This tells us that when you've got green, it's a strong buy. When you've got blue, it's a hold. When you've got orange, it's a sell. When you've got red, it's a strong sell. So you can see here, as we were pushing up, we were pushing up, we were pushing up. That's a strong red. It was indicating we needed to sell, we needed a cool off. So we've pulled back, we've cooled off into orange. That's a sell. And then blue is hold and hold and hold. You hit green down here and you get a bounce down here. That's a strong buy. Anybody that got that green there, oh, this is telling you that the advanced DPO is saying that it's a hold. So it's currently a hold at the moment as far as that's concerned, but let's delve a little bit more deeper into the fundamentals. We've got all the different returns here. You've got average, you've got price, you've got fair value. Now, these are the things that are interesting, guys. Average, fair value, because we talk about the shop. Remember, you're in a shop, you've got two products. You've got one product there, you've got one product there. They're right next to each other. One's at a higher value, a higher price. The other one's less price. Which one do you go for if they're exactly the same? You go for the cheaper price. Now, I want you to change your mindset and think about this with investments. You want to be trying to get the cheapest price possible. You want to know if something's overvalued or undervalued. You can see here, average fair score, 147.60, and it's given a current price of 200.91, and that's 26.53% above fair value. So do you want to buy buying something above fair value is what I'm saying. The Altman Z score. Now, this is an important thing, guys, because this is the security of the company. This is the risk of the company as to whether it's going to go bankrupt or whether it's got strong backing behind it, whether it's got strong liquidity behind it, whether it's safe from bankruptcy. The Altman Z score has given it a 2.49, which is a moderate risk of bankruptcy. So we've looked at this and we've looked at the seasonality, and we've said seasonality looks good around about March. That'd be a good entry around about March. But however, if you're looking for something for a 12-year hold, would you be holding something that's got a moderate risk of bankruptcy? If you've got lots of things in your portfolio that's got a moderate risk of bankruptcy, some of them are going to go bankrupt, guys. So that gives you an edge by looking at the fundamentals. It's a really strong tool to look at the fundamentals on here. Now, this thing, I just want to ask you guys what you think about this. I'm not going to put any accusations out there. I'm not going to be saying anything. But one thing that you can do is you can track to find out exactly what the politicians are buying. Now, when the politicians are buying something, is there something in the background that the politicians know? Because remember, guys, you've got Democrats, you've got Republicans in the US. Democrats are funded, the Republicans are funded. Who are they funded by, guys? Businesses, entrepreneurs. So that means that the businesses and the entrepreneurs get good policies that are pushed through with the people that they're backing. So what I'm saying, guys, is when politicians are buying something, do the politicians know anything? That's why this is a good tool. So what I'm going to do is I'm going to filter all trades above 500,000. So we've got all trades above 500,000. Now, this is the thing that I want to be showing you guys. So this is the thing that's quite strange to me. So Josh Gottheimer. So on the publication date, 15th of the 1st, 2025, transaction date was the 20th of the 12th, 15th was the publication date. So this guy, Josh Gottheimer, who's a representative of the Democrat Party in New Jersey, he bought Microsoft Corporation between $1 and $5 million. Exactly the same day, he's bought Microsoft Corporation between $1 and $5 million. Then again, $1 and $5 million. Now, this is a weird thing. On exactly the same day, he sold between $1 and $5 million. There was a lot of buys there, and then there's a sell there. So that's food for thought, guys. But this is the kind of fundamentals that we can bring into it. If there's something that we think that might be right, there's something that we think might not be right. If we think there's a news event that might be important, we can go on to Forecaster and we can just look at the AI agent. And then the AI agent is going to tell us about what's going on from a macro perspective. Right, okay, guys, let me know in the comments. Did you find this useful? There's a 10% discount that I've negotiated for anyone that thinks Forecast is going to be useful for them. Use my link below. I'll leave a link in the comments as well. Take care of yourself, and goodbye from me.